Good afternoon. I am Sensei Kevlar. Hopefully those of you who are joining me now have been through my dojo and already understand the way of the trader. The way of the trader is we make ourselves profitable always. We keep to a plan, we trade that plan. Plan the trade the plan is the way of the trader. There comes a point, of course, at which your trading becomes, well, elementary. The way of the dragon focuses on how to maximize it. What we are focused on here is creating opportunities beyond the way of the trader. The way of the trader really is about following techniques invented back in the 1980s. You see, back in the 1980s, the institutional market makers really did figure out how to make this work for themselves in terms of the high-speed trading in the market. By using leverage and derivatives, like I have discussed in the way of the trader, they created opportunities for themselves in terms of structuring markets that would pay them out constantly, simply by moving them around through their manipulations, through their market-making techniques. They mastered these techniques, and they created what are high-speed trading bots, effectively, for moving the markets around. And in moving the markets around, they make all these opportunities for themselves. The way of the dragon, the way of the trader is to follow these market manipulations themselves and move in their tails. Well, of course, this got sort of pushed into the institutional investors' realm and forgotten about for a while there, as the market, became sort of the realm of the big boys only. And with the invention of crypto, these new ways came back, and they created these new markets all over again, bigger, badder, even more volatility. The way of the dragon is to understand the way that these markets are created, the way that these markets are moved, the way that these markets are manipulated. And before we get into the actual nitty-gritty of how that works, I want to just sort of outline what it is we'll be talking about. In the beginning, we're just going to be talking about automation and the role of automation in market manipulation and market making. Now, before I even get into, the role of these things, I want to briefly discuss the ethics of doing so. Ethics are an applied concept. The application of ethics is whether or not you are intending to do something nefarious or not, or whether or not you are causing harm or creating a situation where harm has the potential to be created, especially when your benefit is when you're benefiting from that harm. And so there are ways to manipulate markets that are very unethical. There's also ways to manipulate and make markets that are completely out in the open. And when I talk about market manipulation and I talk about market making, what I'm really talking about is I'm talking about another form of fighting or another weapon in the market. The way of the trader is a complete fighting style. So is the way of the dragon. Both of them can be used, ultimately, for good or for evil. How you choose to use your weapons is your decision. And I'm ultimately not the one who's going to be able to tell you if you're being ethical with your decisions. Let me give you an example of what I'm talking about. If you're sitting here and you're making a bot army and you're inviting people to come and trade a coin, and the coin is being announced out in the open, and everybody's getting into it, and then the coin moves as a result of everybody trading that, everybody signaling on that coin. You're being ethical. You're being out in the open. You're not doing anything. You're simply manipulating the market or making the market in order to create opportunity for yourself. If, on the other hand, you are tweeting that Vitalik, the creator of Ethereum, is dead, has died in a car accident, and this is not really the case, you are not being ethical. And I don't suggest you do that. I suggest you consider your opportunities carefully and operate in a way that has your conscience sleeping at night. You don't need to make money off the little guys by pushing them out. You simply can find your opportunities elsewhere and be ethical about the ways in which you are moving and manipulating the markets. And in this way, create more opportunities for yourself without lying to people. There's no need to lie. There's no need to manipulate people. There's no need to go into those types of things. So the first way that I want to talk about the ways in which automation plays a role in market manipulation is in the way I just talked about, the bot army. It's one of the classic setups, by the way. And the fact that East Coast Crypto is doing it is brilliant. I think it's absolutely one of those critical aspects of bringing people into crypto and getting them interested in this idea of trading and idea of doing something. And the idea is very simple. What we're trying to do is we're trying to create signals that other traders are going to trade off of in their way of the trader. This is the way of the dragon. Is instead of following the signals, we're trying to create the signals. Now, some of the signals that are rather obvious, like the ones that we traditionally trade, in terms of bouncing off of support and resistance lines. And the way that those happen a lot of the time is the volume comes up right here and makes those markets happen and makes those bots move. Well, the reason that that's happening is that there are bots which are sitting here looking to do things like skip these lines right here on lack of volume. Alternatively, they're looking to buy at these lines right here when volume occurs over a certain threshold. So one of the ways in which we can activate those bots and signal to them that we're ready for the market to go up is create some volume right here. Well, it doesn't have to be a lot when we're talking about a really low volume coin. When we're talking about these big coins, then there's a lot of potential. It takes a lot of motion for that to work. But when you have coin market cap, when you have something that's really low volume, you come way down here and you get one of these that's not got a lot of volume. You come past the 100, the 200, the 300s. You get something like Feather Coin. You get something like one of these older coins that really doesn't have any volume at all attached to it. What you've got is a lot of bot holders, a lot of bag holders who are all running their bots on this. And what happens is they're all sitting here waiting for this trigger right here to sell. And you see what happens is as soon as they release this sell, well, the market comes back down. So understanding the role of automation in these markets is absolutely key. This is part of the mindset that I'm going to be focusing more on. When the market comes down, the bots activate, we can signal the bots. We can signal the bots by making sure that we are creating the signals that they are trading off of. So in order to make those signals, it's really critical that we understand what it is that they're ultimately doing. So I'm going to break that down as a beginner. I'm going to come over here and I'm going to go to the Bittrex, and Bittrex has information about their API. API stands for Application Protocol or Application Programming Interface. And what this is they provide you with a way to get information out of their exchange in an automated way. They have a standardized format which allows you to query the market, and a lot of what these bots are doing is just sitting here, and what they do when they start up, the very first thing that they do is they hit this page right here with the equivalent of a web browser, and they download the contents of this page. And this page allows them to see programmatically all of the coins that are available. So off of this right here, what we can do is we can say, okay, I hit this URL right here. I'm just going to type it into my web browser, and I'm going to see the document that it gives me back. And you can see that the document consists of a number of sub-documents within it. And those sub-documents contain the markets that are being traded on Bittrex. Here we can see LTC, BTC, Litecoin Bitcoin, Dodge Bitcoin, Vertcoin Bitcoin, and if you just scroll down, you can actually see all of the documents that you're able to, or all of the markets that you're able to see, are able to trade on this particular exchange. And the way this works is that every exchange has their own API, and you just have to sort of write your automation in order to talk to that exchange's specific API, because they're all different. There's no standardization between them. And then, here's our ETC, is what I was scrolling down to. Here's our ETC USDT Classic. What they do is they take that information and they say, okay, I want to pay attention to the ETC USDT market. So then they come down here, and the next thing that they do is they say, I want to get the... they can actually get the market summaries. That's nice. Here we go. I want to get the market summary for ETC USDT, right? So we'll do USDT ETH, rather. Okay. Having gotten ETH USDT from one of these documents, I'm then going to take these two values and I'm going to plug them into my URL right here, and I'm going to get a market summary for that information, for that particular market. This forms the decision information that I'm going to be basing all of my decision making off of right here. When I talked about the market spiking like this, well, what the bot is doing is it's sitting here hitting this URL over and over and over again. And if you do it with enough repetition in a market that is moving fast enough, you will see these numbers change over time as you hit the URL each and every time. And the numbers will change, and as the numbers change, the bot goes, oh, look, the number has changed. The market is spiking. I think it's probably time that we, go ahead and treat this as the place at which we have gotten low enough here, right here, and the market, gives us a nice spike on the volume right here, and then the market goes up, okay? The bot activated because of this number right here. We got a really, really low average over this, and then boom, okay? Somebody triggered a bot by buying the market, and then the market moved up again because the bot was like, oh, I think the market's going to go up. Let me see if we can't prime the market. Somebody set this up intentionally. This is not really somebody buying up the market. This is somebody doing a quick spurt in order to get it up so they can do it, so they can sell it back down. The reason that they're doing this type of automation against this, even though this massive buy right here could potentially be a losing opportunity when all of the stuff that you bought up here comes crashing back down on you, the reason that they're doing this is they're trying to build momentum in the market. They're looking at this market and they're saying, this market is really depressed. They're trying to build momentum in it. This shooting up right here, this is what they call a launch pad. Right here, what we're doing is we're building the launch pad out to the return trip. And we call this priming the market. And what we do is we use automation to ensure that we're really well allocated and our position is really well allocated right down here. This is our new profit line. And then we do a bunch more buying real quick. Okay? If we have a lot of volume coming down here and we end up into a heavy position right here, and then we have no buy side on the other side, we come over here and we look at this. This is pathetic. There's absolutely no volume on the sell side right here. What we could do is we could set our bot to just push this buy order up right on up the market. But the thing is, we don't want to just set the price and go. What we want to do is we want to space this out a little bit. We want to make it look like a big motion up, but really we're just attacking this really tiny, look at this right here, this really tiny sell wall right here. We're just attacking that. We're trying to get into this space right here and trying to move the market up by this motion right here on the right hand side of my depth chart right here, of my volume. Okay, and the reason that I want to do that is I'm trying to prime the market. Is I'm trying to say, hey, look, bots, I'm down below the resistance line. I'm down below my support line. Time to activate all the bots, do some quick buying, cause all the bots to buy us back up, do a quick buy myself, activate my own priming bot. The priming bot is the first, idea here that we're trying to explore in order to push this market up. And then I can sell out real quick at a profit, get rid of some of this nastiness that I had gotten rid of, and set myself up again. Okay? The priming bot is really important. But you don't necessarily have to have a bunch of money yourself in order to do this. If you have something like a bot army, well, guess what? They can do all the work for you. This is how that works. Is it starts with the allocation, then the market sinks away on you, and you're doing more allocation down here, and you need to push this market up again. Well, it's time to activate the bot army. And it's not just your bot army, it's everyone's bot army. If you have a bot army and other people have a bot army and they are activating their bot army off of your signals and you're activating your bot army off of their signals, the market does this. Later, what happens is this plays into a longer strategy. Let's say you're still a bag holder because, you bought, you're still, obviously you're not going to be doing the buying here because according to the way of the trader, you're going to be taking profits all through here. You're still practicing the way of the trader. However, you're layering a new strategy on top of this, which is trying to figure out how to move the market. Coming back down here, we now are setting ourselves up for more allocation. Later on, we can do the same thing out here in November, in December, in January, February, March. We're going to play the long game here. We're going to wait until March, April, May, June, and then we're going to push this again. We're going to push the prime button again. We're going to activate the bot army. We're going to move everything up again, and then we're going to do that a number of successive times. Okay? And when the market moves up a number of successive times and it sits here and bounces off the bottom, everybody else comes in and says, I want this coin. And then the market moves up. Then we get these motions like this right here. Okay, so let's come back here and take a look at how this happened. As we were here, we came down to here, we got our first prime off the bot army right here. Came down and sunk again. We got some more primes we were trying to prime. Here's a prime right here. Look at this prime right here. They were trying to prime the market. They were trying to push it up. Okay? Came down to here, did some more allocation. Prime that market. Prime that market. Prime that market. Finally, we did a really nice heavy prime. Came back down here. Had to do some more allocation. Another heavy prime. What happened after that? After this right here, this big prime push right here, the market went up on its own. I want you to notice the difference between bot army priming and genuine buying. One of them is a vertical wall. This is the way of the dragon. One of them is a gradual slope. This is where the dragon makes all of his money. Is on the gradual slope up here. As he does all of his allocation down here and all of the motion right here. Now, You combine this with news, you combine this with a release, you combine this with other opportunities like Twitter, like social networks, like Facebook, like Discord, like, if you pump and dump rooms, you have all kinds of opportunities for getting the word out there that a market is in motion, that a market is being, pumped, that a market is being primed. Look at this motion right here. It gets to the point where it becomes a little bit hard to tell the difference. Right? We're just, these markets become so heavily manipulated that you can't even tell the difference anymore until you get back down to here and they become obvious again. Here's the motion that's allowing us to take all of our profits right here from all of our allocation that occurred down here. So how do we do this? Once we have gotten the order book, and here it is again, let's get the order book, we can say to ourselves, okay, here is the order book for BTC LTC. And we can take a look at the two pieces of information that we have available to us, the volume and the depth. The depth is really important here. I never really talked about depth in the way of the trader because it just doesn't matter that much in the way of the trader. In the way of the dragon, depth becomes the single most important indicator right here. This is what you're fighting right here on the upside, and this is what you're fighting right here on the downside. If I wanted to move this market up or down, I'm certainly going to choose this fight to pick before I'm going to choose this fight to pick. I think I'm able to win this one before I'm able to win this one. This is really important. This is everything to a dragon. If you are not coming over here and doing careful analysis of what you're up against, your opponent that you're up against when you go to move a market, you got nothing. Got no opportunity to see what the total visible option for you here is. Got to come in here and figure out, well, if that's 500,000 feather coins, what's 500,000 feather coins at this many satoshis, right? That's the kind of volume that you're going to have to move if you really want to get it up to all the way up to here. It's not that lot. It's not a lot, right? This is really important because you can't overcome this wall yourself. No single whale can overcome this wall. Not even a bunch of whales can overcome this wall. It takes every fish in the sea to move a wall like this one right here. If you really want to get it up to here, you're going to need more than just a bot army. You're going to need a bot army. You're going to need a marketing strategy. You're going to need news. You're going to need to create all of the signals that I have taught you so far. You're going to need to pay attention to this right here. You're going to need to manipulate this right here in order to create these motions right here that we can see. This is the way of the dragon. The idea here is that we can take all of these opportunities, combine them together with our existing strategy, the way of the trader, and create new opportunities for ourselves. By moving the market around, what we can do is we can take this information right here, the volume, and combine it with this information right here, the depth. Here is the depth. This is the order book itself, the get order book. By taking these two pieces of information, we're basically combining them into this view right here. And we're saying we can do automated analysis. We can say, what's a good market that's ready to move? What's a good market that's easy to prime, right? This is the way of the dragon, is to sit here and perform automated analysis in order to identify additional opportunities on top of the existing opportunities that he's already making for himself. Once you have established the market that you want to that you want to move, the market that you want to push in one direction or another. What the bot does is it comes down here and it does the following. Buy limit orders, effectively, or market or buy market orders, one or the other. The way that these things work is it's not as simple as just taking this key taking this thing right here and pasting it into here. If you try and do that, it will tell you nonce not provided. Well, what's going on here? It's telling you that in order to use an API like this, you must first authenticate. And the way that authentication works is through your API key. So you log into Bittrex and you get your API key, and what you do is you get your API key and you must also include a nonce, and the nonce looks like this. Whoa. Nonce looks like this. You go nonce equals 1, 2, 3, 4, 5. Okay. Here's the thing about the nonce is it's any arbitrary number. The thing that's important about the nonce is it always has to be increasing. So if I send a nonce of 1, 2, 3, 4, 5 with this authenticated request, the next request must contain a nonce of 1, 2, 3, 4, 6 or higher, otherwise it will not work. This is true for the lifetime of this API key. So in this way, API keys can't be shared around because you're always going to be incrementing each other's nonce and invalidating the other person's nonce. And the only way to just, deal with that is to constantly, rapidly increase your nonce, and who knows how fast the other person is increasing their nonce. It's a problem. That's why you must use separate API keys for everyone. Then, once you have your API key and your secret key, I believe the way things work, the public API, the way things work is that you take your API key and you include it here. So if your API key was ABCDE, then you would include it here. Then what you do is you take this whole thing right here, this whole request, this whole string, and you encrypt it using an encryption method that they supply you with your secret key. And then you supply that, and then you hash that. You create a hash of that and supply that in your request. So say that came out to, because they know your public key. What you do is you sign it. That's what you do. You say my secret hash. I'm just using an example here that you wouldn't really do this. Is 86A 499 AD FA 441. In this way, they can take this much of the message, encrypt it using your public key, which they know, and then hash it, and then if this hash comes out to, and then they decrypt it using your public, they take this and they hash it, and then they decrypt this using your public key, because you encrypted this with this is your hash of this right here, which changes every time. And then if this hash, which is encrypted with your private key, gets decrypted with your public key, they hash this. If this hash which does not match the hash that they computed, this is not valid. So it requires you, in order for this API key to be valid, you must hash this, sign it with your private key, the secret that you get from the API, and then include that encrypted signed hash at the end of your request. What they do is they hash this, they take this, they decrypt what was encrypted with your private key, they decrypt it with your public key, it comes out to be the hash. If the hash that they compute and the hash that you send is the same, the request is valid because only you should have your secret key. In this way, your secret is maintained. Your secret key never goes over the wire. You simply hold on to your secret and you use it to hash every request. You then encrypt the hash with your secret key and include it at the end of every request. So what they do is they make a bot, and they make the bot sit here and do these requests over and over and over again. It's going to sit here. It's going to load up the markets. It's going to load up the volume. It's going to load up the depth. It's going to figure out when these volumes spike, when these volumes go up on a large average, when they go up to 10, 50, 100, 200, 500%. And when these depths are low on the buy side or the sell side, depending upon what they're trying to do. This type of analysis yields the signal that allows them to do, here's the get order history, withdraw. Here we go. Here's get balance, get deposit address. Come on, where's the make order? I probably passed it here. Yeah, it's the account API. Here we are, the market API. That allows them to enter the order into the market that says, I want to buy 1.2 at a rate of 1.3 in the LTC BTC market. I'm going to supply the API key that you gave me. I'm going to hash this. I'm going to encrypt the hash with my secret key. I'm going to send the secret key along with my request, and then this will actually place the order for me on my account. And in this way, we can make the bot buy, and do these really nasty big buy orders over a really short time frame. Having done a lot of buying coming all the way down, and we've got a really big position, we can make a bot that is going to prime the market for us. So now we've got 2-3 bots sort of at our disposal at this point. One of those bots is the ping pong bot, or the EMA bot, or the bot that's just sort of sitting here waiting for us to get into positions and then exit for us. And this is what we want to sort of get the masses to use in order to, get them sort of hooked on this idea of trading and get them to create volatility within the market. They are doing the buying here. They are doing the selling here. This creates volatility within the market. Then we have the secondary sort of bots, which is sitting here doing much more intelligent decision making in the market via the way of the trader, dojo style, and it's coming down and it's doubling and tripling and quadrupling down its order in order to get us into the correct position down here. Finally, we have the priming bot and the market intelligence bot that's sitting here watching the market, looking for its opportunity, trying to make its opportunities, and it's going to do some really quick buying and selling on this, using these strategies in order to make the market move upward very, very rapidly. Prime the market, generate this interest, have it come back down, have it bounce off of here, and then do it again over here in October, in November, in December, in January, February, March. And this is how we will create all of our opportunities on little itty-bitty coins like this one. We won't just sit here and wait for the market to come around for us. We'll actually understand that the market is going to trigger off of these signals and create the signals. Well, if we're down here, it's a perfect time to come in here, look at the volume, wait for a lull, wait for it to come on down here, wait for it to hit off of this line, and trigger that prime. Make that signal, right? If you're talking about a coin like Feathercoin, or one of these, one of these non-ICO coins, as it were, one of these coins that just sort of got launched and has no real owner other than the community because it's just an open source project, well, you can fork the damn thing. You can take it, and say, I'm going to make a new fork of feather coin, or I'm going to improve the existing feather coin. That's an even better way of thinking about it, right? If Feathercoin has some opportunity that's lacking, has some features, you could come in there, hire a developer, spend a little bit of money in order to get the right features added, generate some actual news around the coin getting some new features, and then time all of these primes against that news coming out. Now we can really generate some actual interest in the coin and get the darn thing to come up on us again. Assuming that we've come down in here and we've done all of our allocation down here and down here, this could be a really cheap option for us to move this market upward. And this is the way of the dragon. The dragon doesn't sit around and wait for the gold to come to him. He goes out and he hunts it down. And the way that he does that is by making the market move for him. Or her. He makes it so the signals that are necessary for the market to move are present. And what we're going to be doing more in future lessons is we're going to be exploring more of that code. We're going to be exploring more of those markets. We're going to be exploring more of that API. And what I've got here is a project that I'm going to open source for you. It's called Hippo. And what Hippo does is it does these types of analysis. And the way it works is it downloads the live data from the exchange, from all the different exchanges, from Poloniex, from Bittrex, from OKCoin, from GDAX, from CEX, from Gemini, Bitstamp, Cryptopia, all of them. I'm just sitting here adding them all every day. And what it does is it puts them into a database. It sits here and just downloads the data right here. It just sits here and says, hey, market data, give me the trades and let me shove them into a database. Just put them all into a database. And then what we can do as a group is we can figure out how to use this as a utility to perform more sophisticated analysis. Look, we've got a bot army. We've got these opportunities with automation. We've got these opportunities with community making, with news, with being able to do legit actual work on legit actual coins. We've got developers. We've got real interest in moving markets. We have lots and lots of opportunity creation that we can do as a dragon. We don't have to sit around and wait for the market to move for us. We can move the market. And so that is the opportunity creation that is for a dragon. And I do hope that you remember that this is not something for everyone. This is something for somebody who wants to take their trading career literally to the next level. They want to go above and beyond simply sitting here and waiting for the market to move for them. They want to move the market and create these opportunities for themselves. And so I can't possibly, support my project here, but what I can do is I can give away the code, and then on Wednesday what I'm going to do is later today I'm going to open source the code, and then on Wednesday I'm actually going to give away the contents and access to the database itself, so you can use the code to analyze the market. But even if you don't have the ability to code, even if you don't have a coder, I'm sorry, I can't help you. I can't teach you how to code. Even if you can't do that, you can benefit greatly from understanding what it is that we're doing when we look at the code, when we look at these, when we do the analysis and say, oh, look, it's come up, it's gone down, it's, how can we make these operations work for us? How can we take advantage of these opportunities? In order to be a dragon, you certainly don't have to know how to code. You just have to think like one. And you have to see the opportunities that you can create for yourself, and you have to know how to recognize them. Don't have a bot? Well, leverage Gunbot. You've got a whole community who's interested in using it in order to move coins around. And that is the way of the dragon. I really look forward to seeing you on Wednesday as we do much deeper dive into analysis techniques and look for opportunities, and then on automation and analysis, and then on next week, Friday, and then next week, we're going to do that Wednesday and Friday, and then next week we're going to move on to more of the psychology and more of the fundamentals of the economics that drive these markets. And then in the third week, we're going to combine all of them into a complete fighting style that complements the way of the trader. And I thank you all very much for joining me, and I look forward to seeing you all. I do invite you to share the information that you have learned with each other and within your private circles. But remember that this is not the technique that everybody should be thinking about when they're learning how to trade. When they're learning how to trade, they first need to understand how to make themselves profitable before they understand how to become bigger than just a minnow swimming around in the sea or a whale moving lots of money in these markets. In order to become a dragon, I ask that you respect the idea that you must first learn the way of the trader. And this is really important in the progression, because if you don't, you're liable to use this in the wrong way. You're not liable to see the opportunities that you can create for yourself in an ethical, honest fashion, and then leverage those effectively. So choose your path wisely, and I do ask you to divide yourself and make yourself a dragon, but that is not everyone's path. Thank you very much. I'll see you soon.